You know, as a millennial, there's probably never been a time in history where you could invest in so many things. From stocks, bonds, commodities, crypto, forex, and mask for coronavirus. The ionized You know, where'd you put your money in? Where'd you start? And why, out of all of those options, I choose crypto? First off is our risk tolerance. You know, if you're in your 20s, maybe you've just turned 18, you don't have that much money to lose or to lose. You know, maybe you have a couple hundred, maybe you've saved up a couple K in a few part-time jobs here and there with your means. But essentially, this is the time to be risk savvy, to actually take on the risk of entering a new market as crypto. And even if you lose it all, you can quickly recover as you don't have a family yet. You know, you don't have those extra expenses that come as you get older. Then the second point that I want to mention is that just by being in the market, and this is for any market, at such an early age, you're getting experience. Don't forget, you're trading against 50, 60-year-olds, hedge funds, you know, people who've been in the markets for a long time, and they are actually trying to take our money away. It's not a secret. But the thing is, it's much better to go over this process now and actually try to learn from it than start this in your 30s and 40s where you'll have less time again and you know you'll have other responsibilities on your to-do list. Another upside on this point is that the crypto market compared to traditional markets works 24/7. You know, the best analogy I can think of is learning to play poker. Online versus live, you know, just the number of hands you can go through is much quicker in the online version, and crypto is kind of the online version of poker in this case. What takes you just a few months to learn in crypto could take you years to learn in traditional finance. And then the last thing is just the size of the crypto market. When you compare it with the foreign exchange market or forex, with the size of stocks, you know, such market caps of companies such as Amazon, you know, it's just so small, and things in the markets just tend to go up over time. You know, if you look at any chart, the Amazon chart again, for instance, just keeps going up over time, you know, but it takes actually years to achieve that growth. And it's kind of the same concept in any market that is built upon trust and, you know, value in some sort of sense. So either you see the current crypto market cap from 200 billion going to zero, or the upside is enormous. Of course, that will come with volatility along the way. No one's gonna say no about that. No one's gonna lie here about that. But that volatility is actually another potential upside if you know how to use that volatility to your advantage. Volatility is usually negative for investors, but it's what traders look for. So there are both sides of the coin. You know, so to summarize it here, in case you're a millennial who wants to kind of grasp this investing world with not enough experience, you'll definitely have the chance to do it here. Also, in case you don't have a lot of money, the potential for the size of the market to increase still considerably is still there. So I don't think you're late at all. And just for the concept itself, I think it's worth it. It's completely uncorrelated to any other investment asset that there is. So even if you don't put everything you have, at least put a bit of it, because you most likely won't lose it and it will only grow over time. So I hope that answered our initial question in this video, and I hope to see you the next time around. Take care.